Hello students, welcome to Accounting Explained at Accountwise Academy. This is Latha Venkateshwaran. In this video, we are going to learn about accounting rate of return. Hello students, this is the second video on accounting rate of return. I shall be sharing the link of the first video in the description box. You can go through it for a better understanding. In this video, we are going to go in depth about ARR with a focus on solving exam style questions. Let me give an introduction for ARR before proceeding to the question. Let us learn the formula for finding ARR. The accounting rate of return is the ratio of the average after depreciation and after tax profit. That is profit after depreciation and after tax divided by the average investment. Therefore, ARR is equal to average income divided by average investment into 100. Very simple, no? The formula is where average income is equal to total profit after depreciation and taxes over investment period by number of years. Suppose if the investment period or the project period is for 5 years, then we have to take separately first year profit, second year profit, third year profit, fourth year profit, fifth year profit and total it together, and this total profit will be divided by the number of years, that is 5. That is what is average income. And average investment is investment in the beginning plus investment in the end divided by 2. First, initial investment should be taken, and if there is going to be any investment in the end, that should also be added to the initial investment, and both divided by 2 will give you the average investment. This is one of the exam questions which we are going to solve today. Calculate the average rate of return ARR for projects A and B. Project A, investment is rupees 25,000, expected life in years is 4. Project B, investment is rupees 37,000, expected life is 5 years. Net earnings after depreciation and taxes. See here we are taking profit only after depreciation and taxes. That is very important, okay, for calculating ARR. Project A, the profits are as follows. First year 2,500, second year 1,875, third year 1,875, fourth year 1,250, fifth year it is nil. We have been given profits only for 4 years because the life of the project is 4. Similarly, for project B, profits after depreciation and taxes are first year 3,750, second year 3,750, third year 2,500, fourth year 1,250, fifth year 1,250. Life of the project is 5 years. So we have been given profits after depreciation and taxes for 5 years. If the desired rate of return is 12%, which project should be selected? See, if the ARR is greater than 12%, it can be selected. And out of this, whichever has more ARR, that is more than, suppose if A has 13% and B has 15%, then B will be selected because first both the projects have more ARR, more than 12%. That is the standard ARR for that type of project. And when comparing project A and B, B has 15%, much higher than 13%. So project B will be selected. So we have to do the sum like this. Let us solve the question. Let us solve the question now. This I have taken from your question, okay. First step is ARR is equal to average income divided by average investment into 100. We multiply by 100 because ARR should always be in percentage, okay. First step is to find out the average income. Average income is total profit after depreciation and taxes over investment period divided by number of years. So we are going to find out total earnings of project A. That is total profit after depreciation and taxes for project A. That is See here, project A, total earnings is given here. 2500 plus 1875 plus 1875 plus 1250 is 7500 is the total earnings for project A. Now we have to find out the average annual profits of project A. That is total profit by number of years. Okay. So total profit is 7500. The life of project A is 4 years. So we are dividing 7500 divided by 4. 1875 is the average profit or average annual income for project A. Next, coming to project B. Total earnings of project B is given here, which is 3750 plus 3750, 2500 plus 1250 plus 1250 is 12,500. Annual average profit of project B is total profit by number of years. Number of years for project B is 5 years, right? So 12,500 divided by 5 is 2,500 is average income for project B. Next step is to find out the average investment. This is taken from the question. So average investment is equal to investment at the beginning plus investment at the end divided by 2. If we have any investment at the end of the project, that should be added and both the things should be divided by 2. Obviously from the question there is no investment at the end. So there is only one investment. Project A is 25,000 plus 0 divided by 2 is 12,500. Project B it is 37,000 plus 0 divided by 2 is rupees 18,750. We have come to the last part of the question to find out average or accounting rate of return, which is equal to average annual profit after depreciation and taxes divided by average investment into 100. We multiply by 100 because it is always better to have ARR as a percentage. Okay. For project A, we are going to find ARR first. Average annual profit after depreciation and taxes for project A is 1875, which we found out now. Similarly, average investment we found it out as rupees 12,500. Average rate of return is equal to average profit by average investment, which is 1875 divided by 12,500 into 100. ARR is 15% for project A. For project B, average annual profit after depreciation and taxes is 2,500. Average investment is rupees 18,750. Average rate of return is 2,500 divided by 18,750 into 100, which comes to 13.33%. Now we have to find out the project which gives us more ARR. Both the projects satisfy the minimum required rate of return. What is the minimum required rate of return given in the question? 12%. So both are satisfying. The percentage with those of other project in order that the investment yielding the highest rate of return can be selected. So the investment which is going to give you highest rate of return, that is going to be selected. Obviously, which one is giving highest rate of return? Project A. So project A will be selected as ARR is higher than project B. So ARR of project A is 15%, which is higher than 13.33%. That will be selected. Though both the projects satisfy the minimum criteria of 12%, the project which is giving the highest yield or highest rate of return will be selected. Here project A is selected. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.